Canadian money, the Canadian quarter was Canadian money was 60 cents and 70 cents. You guys are going to see that pretty soon. In a couple of years, American quarters are going to start shooting, try to pass them off. And yeah, I mean, it's going to take $2 US dollars to buy one Canadian dollar, maybe three, maybe more. I mean, you could look at when the U.S. went off the gold standard in 1971. It only cost 23 cents to buy a Swiss franc. Now, for the U.S., America has to spend $1.06, $1.07 to buy one Swiss franc. And the Swiss franc has lost value over that time, too. It's just that the dollar has lost even more. But I think the next, 20 or 30 years, if we even have that long, it's going to be a lot worse. In fact, the dollar could lose as much value in the next 5 years as it has in the previous 30. So, I don't know. I mean, I think more people are talking about Canada. There certainly is. Canada hits the resource theme. There are a lot of people that want exposure to resources. And obviously, Canada has the resources. And, as energy and minerals become more valuable, that improves the Canadian economy because it improves their balance of payments. Everybody benefits, even if you're a business that has nothing to do with resources. You will benefit by the positive economic climate, by a growing trade surplus, which will enable more imports of other goods that you don't produce. So, I mean, I think it is. I don't think it's being ignored at all. And I think as more money flows out of the dollar, a share of it will go to Canada.
Okay. Well, on that note, if the U.S. dollar crashes, what would you foresee the immediate eventual outcome for Canada broadly and commodities specifically?
Well, a lot of that depends on what Canada does in reaction to the crash of the dollar. And the circumstances surrounding that crash. But ultimately, I think that there will be certain companies or businesses in China that will suffer, and there will be others that will thrive. It's going to depend on how they're exposed to the U.S. But as the dollar is crashing, it's crashing against something. Right? So if it's crashing against other currencies, then those countries are going to have the buying power that America lost. So when Canada's thinking about, gee, I lost this American customer, okay, well, you gained another customer. If it's simply crashing against the Canadian dollar, well, then Canadians have more purchasing power. And so there's just more domestic demand that's being created to replace the demand from the U.S. The fear is the reaction. Does Canada panic? Do they start printing more money because they think that, the Canadian dollar is rising, this is a terrible thing. It's not a terrible thing. But it will depend. I think that there'll be a lot of potential immigrants from America coming to Canada, which will be a positive for Canada because more people coming to your country is a good thing, especially if they're coming to work. And generally, I find that the people that leave the country are a lot more ambitious than the ones that stay. So you get the brighter, the harder working, you get the best of the Americans, right? And the worst they stay behind. And also, I'm up here in Canada. It's pretty cold up here. It's warm down in Florida. And so when the U.S. dollar crashes, there will be a lot of Florida real estate that you guys can buy real cheap. Maybe even, high school kids will be able to use their allowance to buy it. So you can turn Florida into, a retirement home for Canadians. So that would be a benefit as we start selling off. And Americans will have to move inland because the coast will be occupied by foreigners, which is what you see if you go to any kind of Caribbean island. The native population doesn't live on the beach; it's all the foreigners. I mean, there's a few Americans that will still have money because there are Americans that own the right things, but a lot of Americans are going to get wiped out because they own.
That you should leverage because of this.
Well, I mean, it's a two-way sword, and a lot of it depends on what you're doing with that borrowed money. But the way borrowers benefit from inflation is it diminishes the value of what they have to repay. If I borrow $1 million $1 million is the price of a nice house. And when I pay it back, $1 million is the price of a pack of chewing gum. You know, what did I give the lender? He gave me the equivalent of a house, and I gave him back a pack of gum. And what's the difference? The difference is my gain, because I own this house now, or maybe I bought a house with money, and the guy that loaned me the money, all he can buy is chewing gum. And the key to the inflation game as a debtor is to make sure your debt is fixed. Because if your debt is floating, then in higher inflation, your interest rates could spiral, and you might not be able to make the payments. And so the key is, if you're going to take on debt as an inflation, make sure it's fixed for a long period of time, so that you never have to worry about the lender requiring you to make higher payments based on all the new inflation that they didn't anticipate when they made the loan. But inflation is a transfer. It transfers wealth from debtors to creditors, from creditors to debtors. And if you think about it in that terms, that's why governments favor it when governments are the debtors. The U.S. government is the biggest debtor in the world, and therefore is the biggest beneficiary of inflation. If we have $14 trillion of debt, if we create 10% inflation, we wipe out $1.4 trillion of debt in terms of real purchasing power. And that is what the government is doing. The government, there's only two ways the government can handle its debt. One is to default, and the other is to inflate. And really, that's one way, because inflation is simply a form of default. But there's one thing I know for sure: we can't pay the money back. That ain't happening. So the question is, how are we going to default? But when the government defaults on its own debts through inflation, it helps everybody else default on their debts. But what that means is, you don't want to be the lender. You don't want to be because you're losing your wealth. And as more and more people figure this out, they won't want to loan money. They don't want to save money, which is a problem, because the key to economic growth is savings. So if you create a society where nobody is willing to save, the society is doomed to collapse, because savings are what we need. But anyway, so should you go out and deliberately borrow a bunch of money because you want to have inflation? I don't know. It depends on what you do with the money, and in terms of the loans. But if you just go out and spend it, then you don't have it anymore. But if you acquire something real with it, if you acquire something tangible, particularly if you buy, you can buy a stock. Let's say you can buy a stock portfolio that has a yield of 6 or 7%, and if you borrow and you're fixed at 5%, you've got a 2% positive carry, so it doesn't cost you anything. You get paid as long as the dividends aren't cut. You're in a good shape, and eventually, if there's massive inflation, you might end up owning that stock portfolio for free, because the dividends that you get might ultimately retire the money you borrowed, and now you have a portfolio that you wouldn't have owned if you didn't take advantage of the borrowing. The risk is, of course, that we're wrong, and instead of inflation, we get deflation, and prices fall, and now you're punished as a debtor, right? Deflation makes that debt more difficult to pay back. So the opposite.
So the next question is related to currencies. Two questions, actually. What kind of appreciation do you expect in the Chinese renminbi over the next 12 months, and what do you believe, if any, will replace the U.S. dollar as the world reserve currency?
Well, as far as the appreciation of the RMB, I don't know. It's going to appreciate. So the RMB will be worth more when the year ends than it is now. Could it be worth a lot more? Sure, it's possible. Right now, the expectation is that the appreciation will be marginal, 5% or something like that. But it could be significantly more than that. It just depends on if the Chinese, come to their senses and allow for a much more rapid appreciation. Would it surprise me if the RMB were 50% higher? No. Would it surprise me if it doubled? No, because it would still be undervalued and it would still go higher. And I think the longer the Chinese wait, the more disruptive it will be when it finally goes. It's kind of like, you're holding a beach ball underneath the water. That's what they're doing. It's the minute they take their hands off the ball, it's going to come shooting up to the surface, and it's not going to stop at the surface. It's going to rise quite a bit higher. And so that's what's going to happen. As far as what will replace the dollar as the world's reserve currency, hopefully nothing. We don't need a reserve currency. We need reserves. We need gold. before the world was on a gold standard, it wasn't really on a sterling standard. It was on a gold standard. All central banks had gold as reserves. And what happened was, when the Second World War ended, America had over 90% of the world's gold. Now, where did we get all that gold? We sold the world stuff, and they paid for it with gold, because that's what they had. So we had all this gold, and the dollar was redeemable with gold. So if you had $35, you could come to the U.S. Treasury, and they'd give you an ounce of gold. And so what we said to the world was, look, why have gold as the reserve? Have the dollar. The dollar's as good as gold. In fact, it's better, because you can earn interest on your dollars, you get no interest on your gold. And we convinced the world to adopt that strategy. Well, the world never would have accepted the dollar as reserves if it wasn't backed by gold. I mean, they wouldn't have been that stupid. You want us to take your piece of paper that's backed by nothing? I mean, how do you back something with something that's backed by nothing? Right? If they say, well, the Swiss franc is backed by gold, okay. And then they say, well, the Swiss franc is backed by dollars. Well, what's the dollar backed by? Well, it's backed by gold. Okay, then the Swiss franc was backed by gold. But if you say, well, the Swiss franc is backed by dollars, what's the dollar backed by? Nothing. Well, then the Swiss franc would have been backed by nothing, so they wouldn't have agreed to it. But when we defaulted in 1971, they devalued the dollar, but they didn't replace it as the reserve. So we've continued from 1971 through the present without any reserve, really, with just a fiat phony monetary system, which is the root cause of all the global imbalances. And the sooner we can abandon that system, the better. So hopefully the world will have enough of fiat currencies. Once the dollar collapses, they will not be very quick. You say, well, the dollar collapsed, okay, let's just replace it with the euro. Or let's just replace it with the yen or even the RMB. Now, if the RMB, if one of these currencies can be backed by gold and redeemable gold, then it might work. Maybe the Chinese can pull it off. The Chinese are the world's largest gold producers. So they're producing a lot of gold, which they can use to back their currency. They could take some of their $3 trillion in reserves and buy some gold mines. Maybe they will do that. But I think that's what's going to happen. And the question is not, will the dollar lose its reserve status? The question is, how soon will that happen? And I think it's going to happen relatively soon, because it's because the dollar was a reserve currency that we have all this growth, right? But we are hanging ourselves with it. And the government is getting bigger and bigger. The debts are getting bigger and bigger. The numbers are extreme. The world can't support it. And countries like China, people keep telling, oh, China's never going to stop buying our bonds because they own